What's up traders, welcome to Failure to Displace. In this video we're going to take a look at the price action on Tuesday the 22nd of August, specifically in the London session where we had a perfect setup for an 11-hour reversal trade. We'll jump into some higher time frame charts now and see what analysis led to this potential rather epic trade. So here we are on the 15-minute chart. Using our liquidity tracker we can see what session liquidity we have got left over. So quick analysis on the 15, we can see on Friday we put in a weekly low, which is unusual, but price took out the weekly low on Friday and has since started pulling back. Monday's price action took out Friday's high. We've had a small pullback and now we are in the Asia session taking out Monday's high. So we're still bullish now, we're making new highs. Taking out the high and we are pulling back, but one thing that has me very interested is the fact that we are very close to taking out Thursday's high from the New York session and also the New York session high from Wednesday, and Wednesday's high is not too far above us as well. We can see we have got bullish market structure now on the 15-minute time frame. We're respecting 15-minute fair value gaps. So these bullish fair value gaps are being respected on the way up. So we have got bullish market structure to be aware of. As far as session liquidity below us, we have the Asia low, which has got relative equal lows, and the New York PM session low as well from Monday. So what I'm going to take note of is I'm going to take note of these 15-minute fair value gaps, which may support price for continued bullish price action, going in line with the trend. I would also like to take a fib from the from the low of the New York PM session yesterday to this current swing high. I've not really had any pullback yet, so premium, which is what we're currently in here, really would be looking for shorts in this area, and for the longs we want to be pulling back down into a discount, so below the 50% of this range. Optimal trade entry is always a key area where we could be looking for a reaction. We do have an order block around optimal trade entry, and we do have this fair value gap within the order block. So if we do pull back to this area, we could potentially be looking for a continuation trade to come and take out these highs. So we are just about to jump into the London session starting at 1 AM. I'm going to drop onto the lower time frame charts. I'm going to keep an eye on these levels that we have now marked out. So price has tapped that 15-minute order block as soon as London opens and respected it. Come back to retest the order block. Coming in deeper. So again, if we're looking for longs, I really want to be into a discount. So I want to be below the 50% level. So specifically looking at this 15-minute fair value gap. You can see we do have a larger 5-minute fair value gap here as well. So we've not come into a discount. I will just clarify there's no news on the cards today, so we've just got clean price action. We're not expecting any manipulation due to red news folders. Price is now pulling away. We haven't come back into a discount, so there's no long positions for me yet as far as a continuation trade goes. We've got these strong bullish candles now. Our eyes should be drawn onto these two session untapped levels of liquidity. So we've taken the first one. So because we've swept the first one, I'm going to revert to the 2022 model. So we're going to be looking on the 2022 model for a break of structure, which currently is this low here. So we would want a break of structure with displacement if we're going to start looking for any kind of reversal trade. This is still our current break of structure, so we're not putting a new swing low yet. Let's just zoom in on price action so you can see. So again, no break of structure. We're still in this dealing range. This is the low that created the new high. We do have internal structure here. However, for my 2022 model, I don't count these as a break of structure, so I wouldn't be looking for a short with this internal liquidity being taken, we could find that this is just swept for an inducement to go higher. So I would like to see an official break of structure by taking out this swing low, which is the structure that created the new high. So coming down, we're coming up to a new hourly candle as well to start at 3 AM, so that's going to take us into our silver bullet hour as well. So there's no break of structure here. We are going now potentially to take out the new high and driving towards this. We're into silver bullet now. So if you were going to trade the silver bullet, I would hazard a guess that you would be using this as the draw on liquidity. So as far as my analysis for a silver bullet trades, I would take a first fair value gap driving towards my identified level of liquidity. So that would be here. So I would take this fair value gap. My silver bullet strategy, if you have not watched the video, is to have a 5 pip stop loss with a 5.2 take profit. So the entry would be at this point here. We tagged in for a silver bullet. Keeping our eye on this. I'd be more interested in a 2022 reversal after taking this trade. There is your liquidity sweep. Not quite got to the 5.2 on the silver bullet. Put in a new high. This is our break of structure here. So for a 2022 model, we would want this break of structure, leaving a fair value gap for an entry. There's no, we have broken structure, but there's no fair value gap for an entry. The 2022 model, your silver bullet has now completed as far as my analysis on a silver bullet. So we have hit the 5.2 1-to-1 on a silver bullet. So there is a potential long there, having had a clearly defined level of liquidity. However, for this, I'm more interested in looking at a reversal. Our new swing low is this one for a 2022 model reversal. The swing low is actually here now. So this is our current swing low. This has got a candle to the left is higher, candle to the right is higher, and this candle put in the new high. We have a break of structure, but we've got no body close and no fair value gap at the moment. Put in a new high. So our break of structure is now this one. So this is the last swing low before the new high. Fair value gap, bullish fair value gap. So we've got some volume now taking this new high. Follow this up with our break of structure. Break of structure is now here. So this is, let's just clarify, is that a break? So I'm looking at the figures here, which are telling me what the low is. So the low is 9281, 9281. So these are relative equal lows. So I would actually still class this as my break of structure. Being relative equal lows here doesn't fall within my criteria of a break of structure. Put in a new high, and then we have a swing low here. So this is now the break of structure. So this is the last swing low before the new high was put in. The high has come in and is now driven down. Okay, so we've got a break of structure. Do we have a fair value gap? Fair value gap is created at this point. So what I'm noting here is we have this fair value gap on the bullish side. Overlapping with a bearish fair value gap here. So where these two overlap, so this candle here, this is candle 1, candle 2, candle 3. So the fair value gap is created between candle 1 and candle 3. When there's a gap between the close of this candle, the open of this candle, they don't meet. This is a fair value gap, but we also have a volume imbalance as well between candle 2 and candle 3. There's quite a lot of missing volume here, and then we've closed straight back through it with a bearish fair value gap. This would be a very sensitive area for a reaction if price pulls back here. We also have obviously the bottom of an order block here. So I would look to take a short trade. So we've got a break of structure with the body close. We have left displacement. We've got a balanced price range and an order block. I would take a short trade from the 50% of that fair value gap with a stop loss above the swing high that created the fair value gap. So from candle 1. So again, from a bearish side, this is candle 1, this is candle 2, this is candle 3. So the fair value gap is created between candle 1 and candle 3. The stop loss goes above candle 1 just by a couple of points. I'm going to enter on 50% because it's a large fair value gap. We do have this balanced price range in here as well. Target wise, so this is something to keep in note. This kind of price action here, this to me just looks like it's building liquidity. It's had no pullback, it's just dragging buyers higher and higher and higher. So we're really engineering liquidity here because we've had no pullback. So as we break this into this really should be free fall for a very, very rapid bearish price move. Which means I would be targeting this swing low as my first level of sell side, which would give 6.8R if we do get tagged in. So let's just have a quick look here. Not tagged in yet. We're coming into 4 o'clock now, so the silver bullet hour's over. We're coming into the new hour. This is where you expect volume to come in. So we're looking for a pullback now into this kind of balanced price range, 50% area of this upper fair value gap. First candle has pulled back a little bit. And that's just tagged us in. So you can see it's just clipped the 50% of the fair value gap and rejected. And also a point into the BPR. Just tap the BPR now, and then a massive rejection from that BPR, 406. So that's really, really nice price action. Already started to take this liquidity now, so our eyes are drawn onto this sell side down here, hopefully. And then potentially, if we're getting a good strong move, we've obviously put in this swing low. Sell side at the bottom of the range. So the new hour with the volume is coming in. Really, really strong move. Again, there's no news on the calendar, so this isn't news driven. Price actions come down, 6.8 taken. Basically 0 drawdown, tapped us in, and a lovely, lovely drive down. We've taken this sell side, so this would be TP1, take the majority of the trade off. If you wanted to leave a runner, then I would be looking at taking the session low. Come back, you can see this was our original 15-minute fair value gap. You can see price hovering around that, so there's a reaction on the 15-minute fair value gap. Pull back eventually, well, smashes through. Take out the session low for an 11R trade. Really, really clean price action. A couple of giveaways at this point then, where obviously we had the break of structure at the top. We had big displacement candles, which is really something that we need to be keeping an eye on. These two big candles were much larger than the bullish candles going higher. And then we had this balanced price range, volume imbalance as well, which was respected absolutely perfectly. So that's really, really nice price action. And then a nice signature that I like to see in price action is this ramped volume. If you see price just ramping like this at a nice 45-degree angle, this to me says that they're engineering liquidity here, and price should very quickly retrace through this lot, which it does do. And again, keeping an eye on the new hourly volume coming in. So 4 AM, we can see we get that little pullback into the balanced price range, and then price accelerates away. So again, keeping an eye on the 15-minute cycle and the new candle opens, new hourly candle opens for an injection of volume. And so I hope you found that useful. Really, really nice, clean price action. Lovely, lovely trade is that one. If you enjoyed the analysis, please leave a thumbs up. If you have any questions, leave them in the comments section down below, and consider subscribing. It'd be great to have you guys on board. Thanks for watching, and I'll see you in the next video.